Question 1. In light of recent developments, a financial controller at GreenTech Limited discovers that their intercompany transactions are not settling automatically across subsidiaries. What should be the first action to ensure that settlements are processed correctly? A. Verify that the intercompany IEs are properly set up and mapped. B. Check if batch versions for automatic settlements are scheduled. C. Review whether each subsidiary has a defined business unit chart. D. Validate that multi-currency conversions are activated at company level. Answer. Correct answer. A. Explanation. The first checkpoint in intercompany settlement failures is reviewing the IEs because they control how intercompany accounts are posted and cleared. Without correct IE setup, transactions cannot flow properly to designated intercompany accounts. While batch versions support automation, they will fail if mappings are missing. Business unit charts help in classification but do not drive settlement mechanics. Multi-currency settings evaluation, not fundamental intercompany clearing logic. Ensuring IE integrity is therefore the most critical first step. Question 2. Given the circumstances, Mr. Alvarez, an app manager, notices discrepancies between supplier balances in the subledger and the general ledger. Which approach best ensures reconciliation accuracy? A. Manually adjusting journal entries in the general ledger. B. Running integrity reports to identify breaks between app and GL. C. Reviewing vouchers individually and correcting one by one. D. Disabling automatic offsetting during voucher posting. Answer. Correct answer. B. Explanation. Integrity reports are specifically designed to detect mismatches between subledger and general ledger balances, providing a systematic overview. Manual adjustments might hide issues rather than solve root causes. Reviewing each voucher individually is inefficient and not scalable. Disabling automatic offsetting would risk further inconsistencies rather than fixing current ones. Therefore, integrity reporting is the reliable, audit-compliant method for reconciliation in JD. Question 3. Through careful analysis of one-view reporting, A4 wants to design a dashboard that provides real-time R collection status. What is the most appropriate tool within JD Audits to accomplish this? A. General ledger financial statements. B. Caphone for embedding third-party content. C. OneView customer ledger inquiry. D. Dress book management functions. Answer. Correct answer. C. Explanation. OneView Customer Ledger provides real-time inquiry and reporting capabilities for customer-related transactions, including credit and collections data, making it ideal for monitoring receivables. Financial statements in GL summarize company-wide results but lack collection details. Caphone allows content embedding but requires underlying data sources like OneView inquiries. Address book supports master data management, not transaction analytics. Thus, the OneView Customer Ledger is the tool best suited for monitoring collections in real time. Question 4. The most significant aspect of multi-currency configuration in JD Audits is ensuring what? A. All companies share the same base currency. B. Exchange rates are updated in the system's currency table. C. Business units are restricted to one functional currency. D. Users manually convert values when entering transactions. Answer. Correct answer. B. Explanation. The cornerstone of multi-currency management is maintaining accurate and current exchange rates within the system's currency tables. This ensures proper conversions across companies and ledgers. Requiring all companies to use one base currency defeats the purpose of multi-currency. Business units can handle multiple reporting currencies and are not restricted. Manual conversion undermines system automation and errors. Therefore, updating and maintaining system exchange rate tables is fundamental for compliance and financial accuracy. Question 5. Mr. Thompson, a financial systems administrator, is tasked with setting up automatic depreciation rules for fixed assets. Which configuration should he prioritize to ensure postings flow correctly into the GL? A. Defining asset locations and transfers. B. Configuring fixed asset IEs. C. Creating depreciation override codes. D. Setting up address book records for assets. Answer. Correct answer. B. Explanation. Fixed asset IEs dictate how depreciation and other asset transactions post to the general ledger, making their configuration critical. Asset locations and transfers are operational but do not affect posting. Depreciation override codes may refine calculation methods but won't ensure GL integration. Address book records may be linked to assets but are not central to depreciation accounting. Thus, correctly configuring EIS is the foundational step to achieve seamless fixed asset posting to the ledger. Question 6. Examining the consequences of improper journal entry processing, which action most directly prevents incomplete postings in the general ledger. A. Reviewing address book records for accuracy. B. Running OneView integrity reports. C. Ensuring batch statuses are set to posted. D. Configuring business unit security correctly. Answer. Correct answer, C. Explanation. Journal entries in JD OIDs remain incomplete unless their batch status moves to posted, which finalizes entries into the general ledger. Address book accuracy affects vendor customer data but not journal posting. Integrity reports help diagnose after the fact but don't prevent incomplete posting. Business unit security controls access rights but not whether journal is fully processed. Thus, confirming monitoring posting status ensures that transactions are fully recognized in the financial system. Question 7. When analyzing user-defined codes, what is their primary benefit in financial configuration? A. They replace EIS for transaction posting rules. B. They enforce consistent data categorization across processes. C. They automatically reconcile subledger to general ledger. D. They eliminate the need for address book records. Answer. Correct answer, B. Explanation. UX ensure data consistency across JD OIDs by categorizing and standardizing values for system fields, reducing entry errors, and improving reporting. They do not replace EIS, which control posting. They cannot reconcile subledger and general ledger, which is done via integrity reporting. They also do not substitute address book records, which are foundational for suppliers and customers. Therefore, their purpose is enhancing consistency and standardization of financial data classification. Question 8. During the process of setting up budget forecasting, a company wants to model cash requirements under multiple scenarios. Would JDE functionality best supports this? A. Intercompany settlement processing. B. Cash forecast modeling. C. Depreciation calculation engine. D. Payment workbench configuration. Answer. Correct answer, B. Explanation. Cash forecast modeling in JD OIDs is designed to simulate and project cash flow requirements under varying budgetary scenarios, helping decision-makers prepare for liquidity needs. Intercompany settlements focus on clearing balances, not projections. Depreciation calculation is tied to fixed assets, not cash planning. Payment workbench supports app processing but doesn't create forward-looking forecasts. Thus, using the cash forecast modeling functionality is the most accurate way to manage liquidity projections. Question 9. To illustrate this point is new and observes that app payments are being duplicated when run in batch. What is the most probable root cause? A. Suppliers missing address book category codes. B. Incorrect setup of automatic payment instructions. C. Journal entries bypassing voucher match. D. Business unit security misconfiguration. Answer. Correct answer, D. Explanation. Duplicated app payments often occur due to misconfigured business unit security, which can cause overlapping access or duplicated processing authority, leading to duplicate payment runs. Missing address book category codes affect reporting, not payment duplication. Journal entries bypassing voucher match affect reconciliation, not duplication. Incorrect payment instructions could cause incorrect sequencing but direct duplication. Therefore, reviewing security and authority setups is critical to resolving duplicate payment execution issues. Question 10. From a practical standpoint, which best describes the purpose of the business unit chart of accounts in JD OIDs? A. To reconcile app and R balances automatically. B. To define organizational structure for financial tracking. C. To override EIS at transaction level. D. To generate cash forecasts by default. Answer. Correct answer, B. Explanation. The business unit chart of accounts establishes the organizational framework for financial tracking and reporting, ensuring alignment of operational activities with accounting. It does not perform reconciliations between app and R, which require reporting tools. It does not override OEs, which control posting logic. It also does not generate cash forecasts, which are part of budgeting modules. Instead, it's defining the structural backbone of how financial results are recorded and reported. Question 11. While examining the accounts receivable process, a credit manager notices that invoices are being entered but customers' open balances are not reflecting correctly in the aging report. What is the most likely reason? A. Integrity report for R to GL not executed. B. Invoice batches not posted to the general ledger. C. Customer address book category codes missing. D. Payment terms not assigned in customer master. Answer. Correct answer. B. Explanation. Open balances in our aging rely on invoices being fully posted to the general ledger. Unposted batches will appear incomplete, leading to misaligned reporting. Integrity reports help diagnose, but only after posting. Missing address book category codes may limit reporting segmentation, but won't block balances. Payment terms impact due dates and discount calculations, not whether balances appear in reports. Posting invoice batches is the critical action to ensure accuracy in our aging. Question 12. When faced with configuring app vouchers for international suppliers, Mr. Silva realizes that tax information is not flowing into the vouchers. What configuration should he verify first? A. Supplier's address book record includes tax ID. B. Tax rules are properly linked in UGS. C. Tax explanation codes are set in supplier master. D. Journal entry default accounts include tax offsets. Answer. Correct answer. C. Explanation. Supplier master must include tax explanation codes to drive correct tax calculations during voucher entry. While address book tax IDs are informational, they don't enforce calculation. UGS store definitions but don't automatically apply rules without setup in the master. Journal entry defaults ensure GL postings but don't trigger tax capture. Thus, validating supplier master configuration ensures compliance with tax calculation in app vouchers, core requirement for global suppliers. Question 13. The underlying principle of account reconciliation in J.D. Woods is best described as what? A. Ensuring accounts have zero balance after posting. B. Matching subledger details with general ledger balances. C. Restricting journal entry access based on security roles. D. Posting adjustments automatically to balance discrepancies. Answer. Correct answer. B. Explanation. Reconciliation ensures subledger transactions align with summarized general ledger balances, verifying system accuracy and financial integrity. It does not mean forcing balances to zero. In many accounts naturally hold values. Security roles limit access but are not reconciliation tools. Automatic posting adjustments could compromise audit trails if used without root cause analysis. Thus, reconciliation's essence lies in confirming consistency between transaction detail and financial statement level accounts. Question 14. Given the circumstances, is it Patel needs to build a OneView report comparing supplier payment history with outstanding vouchers? Which approach ensures the report can be dynamically filtered by supplier? A. Using address book search types within the report query. B. Embedding CAFON content for external supplier data. C. Applying a data selection on supplier number field. D. Configuring multi-currency rules at the report level. Answer. Correct answer. C. Explanation. Applying a data selection on the supplier number field enables users to filter dynamically, allowing flexible reporting within OneView. Address book search types define categories but do not create live filters in reports. CAFON integration is useful for dashboards but not core OneView queries. Multi-currency rules ensure correct valuation but do not drive supplier-based filtering, hence the most direct method. Defining data selection criteria on supplier-specific fields. Question 15. Contrary to popular belief, what is the key purpose of automatic accounting instructions (OIs) in J.D. Woods? A. To reconcile vouchers and journal entries automatically. B. To define how transactions map into the general ledger. C. To restrict user access to sensitive financial accounts. D. To maintain currency exchange rates in the system. Answer. Correct answer. B. Explanation. Eyes provide the framework for mapping transactions into the correct general ledger accounts, ensuring consistency and audit compliance. They do not perform reconciliations, which are handled via reports. Security roles manage access, not eyes. Exchange rate maintenance is handled in currency tables unrelated to eyes. Thus, their core role is connecting operational transactions with the appropriate accounting entries. Question 16. During the process of entering cash receipts, a clerk realizes that the system is not applying receipts against open invoices. Which configuration issue is the most probable cause? A. The customer's credit limit is exceeded. B. Automatic offsetting is not enabled in eyes. C. The receipt entry batch has not been approved. D. The match rules for invoice application are missing. Answer. Correct answer. D. Explanation. Cash receipts need predefined match rules to automatically link receipts to open invoices. Without these, receipts remain unapplied. Credit limits affect new orders, not application. Offsetting in eyes relates to posting, not invoice matching. Approval status determines batch readiness but does not influence matching mechanics. Therefore, ensuring that invoice application rules exist and are properly configured is critical for automated and accurate receipt processing. Question 17. Demonstrated by Is Roberts' challenge in fixed assets, she notices depreciation as calculated but not posted to the general ledger. What step likely remains incomplete? A. Running the depreciation projection report. B. Generating the depreciation journal entries. C. Setting up disposal rules for the asset. D. Updating the address book category codes. Answer. Correct answer. B. Explanation. Depreciation calculation generates values, but those values must then be converted into journal entries for posting. Running projection reports only shows results without updating ledgers. Disposal rules are relevant for retiring assets, not ongoing depreciation. Address book codes have no impact on posting depreciation. Thus, the missing step is the creation and posting of depreciation journal entry. Reflect asset expense in the GL. Question 18. When analyzing general ledger workflow, what is the role of the batch versions functionality? A. It allows multiple companies to share the same chart of accounts. B. It defines how reports or processes run with specific data selection and processing options. C. It automatically posts journal entries without review. D. It secures business unit access for journal preparers. Answer. Correct answer. B. Explanation. Batch versions let users configure how reports or processes execute, including filtering and processing instructions. This ensures flexibility without duplicating reports. Shared charts of accounts are handled through company and business unit setup, not batch versions. Automatic posting without review is neither controlled nor compliant. Business unit access security is managed separately. Therefore, the key role of batch versions is process customization through data and processing selections. Question 19. In the absence of clear supplier terms, Mr. O'Connor sets up vouchers using default values. Later, he finds that payments are being made earlier than expected. What configuration is likely missing? A. Added codes for payment instrument assignment. B. Voucher match rules for purchase order control. C. Supplier-specific payment terms in supplier master. D. Automatic payment group security setup. Answer. Correct answer. C. Explanation. If supplier master lacks defined payment terms, the system defaults may trigger earlier than expected disbursements. HUD codes handle categorization of instruments but not timing. Voucher match ensures PO control unrelated to payment due dates. Group security controls access, not scheduling. Thus, defining correct payment terms at the supplier master level ensures alignment of voucher entry and payment processing timelines. Question 20. The contemporary view of multi-company setup in J.D. Woods emphasizes which principle each company must have completely isolated address book records. B. Companies can share common objects while maintaining separate ledgers. C. Consolidated reporting requires eliminating all intercompany transactions. D. Multi-company setup is only required for different base currencies. Answer. Correct answer. B. Explanation. JD Wood supports multi-company structures where common objects like suppliers or customers may be shared, but each company maintains distinct ledgers for accountability. Address book data is often shared across companies for consistency. Intercompany transactions need not be eliminated. Instead, they are settled. Multi-company setup is used for structural, legal, or reporting reasons, not just currency differences. Thus, the defining principle is balancing shared master data with separate financial records. Question 21. During the process of voucher processing, ISCAVA observes that certain vouchers are not eligible for automatic payment selection. What is the most probable reason? A. Payment status codes prevent them from being picked up. B. Supplier address book search type is missing. C. The vouchers are not yet posted to the general ledger. D. Multi-currency translation has not been executed. Answer. Correct answer. A. Explanation. Automatic payment selection relies heavily on payment status codes. If a voucher carries a status that excludes it from processing, it will not be selected regardless of other configurations. Missing address book search types affect reporting but not payment eligibility. Posting status ensures accounting accuracy but is not a prerequisite for inclusion in payment runs. Multi-currency translation impacts value, not payment scheduling. Thus, incorrect or restrictive payment status codes are the key issue here. Question 22. From multiple perspectives, what is the key advantage of using the OneView supplier ledger inquiry? A. It enables automatic posting of supplier invoices. B. It provides real-time drill down into voucher and payment details. C. It reconciles intercompany settlements across business units. D. It enforces security over app transaction entry. Answer. Correct answer. B. Explanation. The supplier ledger inquiry in OneView offers real-time visibility and drill down into supplier transactions, enabling managers to analyze voucher and payment activity effectively. It does not post invoices. That is handled by voucher entry and posting processes. Intercompany settlements are managed through separate modules. Security over entry is managed via role-based controls. Thus, its central benefit lies in providing actionable insights into supplier balances and payment histories through real-time inquiry. Question 23. Given the circumstances is to lie, a treasury analyst wants to understand why his cash forecast excludes anticipated app payments. Which configuration should he check first? A. Whether app payment data sources are included in forecast setup. B. If address book category codes for suppliers are active. C. Whether depreciation rules are generating expenses. D. If journal entries have been approved by managers. Answer. Correct answer. A. Explanation. Cash forecasting must include app payment data sources in its setup. Otherwise, future disbursements will be omitted from projections. Supplier category codes help classification but do not affect forecasting. Depreciation rules deal with fixed assets and expense recognition, not cash forecasts. Managerial approval of journal entries ensures control but does not drive forecast inclusion. Thus, ensuring app payment sources are linked is essential for realistic cash flow forecasting. Question 24. The correlation between journal entry approval workflow and financial integrity is primarily based on what? A. Ensuring journal entries are routed for review before posting. B. Forcing system reconciliation of R and app balances. C. Locking depreciation expense accounts during review. D. Automating intercompany eliminations before reporting. Answer. Correct answer. A. Explanation. Approval workflow ensures that journal entries undergo proper review before being posted, safeguarding against errors or fraud. Reconciliation of R and app is performed by integrity reports, not workflow. Depreciation expense accounts are managed through OIs and posting rules, not workflow locks. Intercompany eliminations are a separate consolidation activity. Thus, workflow's primary function is to ensure controlled and validated entries enter the general ledger, maintaining accuracy and audit compliance. Question 25. While it is true that address book is used across JD Woods, which best explains its importance to financial modules? A. It acts as the foundation for supplier, customer, and employee master records. B. It generates automatic journal entries for transactions. C. It calculates foreign currency translations. D. It enforces segregation of duties across modules. Answer. Correct answer. A. Explanation. E-address book underpins master data for suppliers, customers, and employees, ensuring consistent identification across financial modules. It does not generate journal entries, which are triggered by transactional activity and OIS. Currency translations are managed through currency tables. Segregation of duties is enforced by security roles, not address book. Therefore, its critical importance is in serving as the founding record repository that ensures integration across app, art, and payroll functions. Question 26. Taking into account the depreciation process, Mr. Harrison notices that system-calculated depreciation differs from expected results. Which is the most likely reason? A. Incorrect value assigned to the asset cost account. B. Depreciation rules or methods are set up incorrectly in Asset Master. C. Automatic accounting instructions are missing for intercompany accounts. D. Address book integration with fixed assets has failed. Answer. Correct answer. B. Explanation. Depreciation is driven by rules and methods defined in the Asset Master. Incorrect setup results in variances. UC values classify records but do not control calculation methods. Intercompany IEs affect cross-company postings, not depreciation math. Address book integration supports asset ownership or responsibility but has no effect on depreciation computation. Thus, the most direct cause of unexpected depreciation values is misconfigured depreciation rules or methods. Question 27. By evaluating batch version setup, which problem could arise if users copy versions without adjusting data selection? A. Duplicate reports running with unintended results. B. Failure of intercompany settlements to clear balances. C. System prevents batch processing entirely. D. Exchange rates not updated in multi-currency tables. Answer. Correct answer. A. Explanation. Copying batch versions without changing data selection may lead to duplicate reports or processes producing unintended or overlapping results. Intercompany settlements are independent of report versions. System-wide batch failures would require more fundamental errors. Exchange rates in multi-currency are maintained separately from batch version configuration. Therefore, the most likely risk is redundancy or confusion from unmodified data selections within copied batch versions. Question 20. Under the assumption that revenue recognition must comply with accounting standards, what role does J.D. Edwards' R module play? A. It enforces recognition rules based on invoice dates and performance obligations. B. It eliminates the need for multi-currency adjustments in revenue accounts. C. It automates supplier reconciliation against customer balances. D. It prevents journal entries from being modified after posting. Answer. Correct answer. A. Explanation. J.D. Edwards' R module supports compliance by enabling revenue recognition aligned with invoice timing and contractual obligations, ensuring adherence to standards like ASC 606 IFRS 15. Multi-currency adjustments still apply, but they are handled separately. Supplier reconciliations are app functions. Preventing post-entry modifications is a DL control, not R. Thus, R's core. Revenue recognition is mapping revenue timing to contractual and accounting rules. Question 29. In contrast to manual reconciliation, which feature best ensures ongoing accuracy of app balances in J.D. Edwards? A. Automatic offsetting during voucher posting. B. Integrity reports comparing app subledger to GL. C. Batch version approval for voucher batches. D. Supplier category code validation. Answer. Correct answer. D. Explanation. Supplier category codes ensure that transactions are classified correctly for reporting and analysis, which helps maintain ongoing data accuracy. Automatic offsetting supports posting but does not itself validate balances. Integrity reports are diagnostic tools rather than preventive. Batch version approval ensures process control but not continuous balance accuracy. Thus, proactive maintenance of supplier category coding fosters cleaner reporting and minimizes reconciliation challenges in app. Question 30. Research indicates that CAFOAM provides a unique advantage in J.D. Edwards dashboards. What is its primary benefit? A. Embedding contextual data from internal and external sources. B. Restricting journal entry access across multiple users. C. Automating cash forecasting without manual inputs. D. Reconciling supplier ledgers with customer accounts. Answer. Correct answer. A. Explanation. Caphone enables embedding of contextual data, Intel JDE content and external sources, into single dashboard, enhancing user productivity by presenting relevant insights in one view. It does not control journal entry access, which is security-driven. Cash forecasting is handled by financial modules, not Caphone. Reconciling ledgers is reporting process, not dashboard feature. Therefore, its primary benefit is providing integrated, contextual information directly in user workflows.